It is inevitable that at one point in everybody's investing journey, you're going to have to deal with a stock market crash. I've only been investing for 2 years and have already experienced a market crash and a market correction and a possible crash coming up now. So on today's episode, we're going to be going over the lessons that I learned from the 2020 crash and what I'll be doing if there is a crash and what I think long-term investors should be doing if there is a crash. If you're new to the channel, welcome. We go over long-term dividend growth investing here. Make sure to join the Discord, link in the description. Also, smash the like button for the YouTube algorithm. Subscribe. I'm trying to get to 100 by April 10th. That would be the 1-year anniversary of my YouTube. We'll do a Q&A if I hit it, and I'm really looking forward to when we hit it. Wink, wink. Thank you so much, guys. Again, subscribe, turn on post notifications, and roll the intro.
Hello, I like money.
First, I want to go over my thoughts on the current Russia-Ukraine situation real quick. I went over it more in depth on the last video, so go check that out. It's my monthly portfolio update. So I personally think this is just a really big overreaction, and this is leading to the market correction that I think we did actually need. Obviously, it's very unfortunate what's happening in Ukraine, and my thoughts and prayers go out to everybody that's been affected by it, but we can't help to view it as a buying opportunity here for long-term investors. This is an event where, a lot of people are panicking really quickly. And from my observation so far, I've noticed that the really high quality companies like Apple and Microsoft, those go down the fastest and recover the quickest during a market crash and market correction. I think companies that are, slow growers with higher dividend yields, for example, Altria, Coca-Cola, AT&T, I think those are going to be staying at the same prices for a little more. But I think, especially during a market crash, the high quality, blue chip, good companies, those are going to fall the quickest and recover the fastest. And that's, one of the big points of this video I want to get across. Here's a clip of Peter Lynch, in my opinion, one of the greatest investors of all time. He basically goes over why it's normal for market corrections and bear markets to happen and what you should do during them.
Or more. So 50 declines in 93 years. About once every 2 years, the market falls 10%. We call that a correction. That means that's a euphemism for losing a lot of money rapidly, but we call it a correction. And so 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. We've had 15 declines in 93 years. So every 6 years, the market's going to have a 25% decline. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stock.
The market is going to go down sometime. You just need to know that. Not to brag about myself or anything, but I think one of my strongest qualities as an investor, especially a young investor, is having a really tough gut when stocks go down. This comes back to understanding and knowing the businesses that you invest in fundamentally and knowing that they're great quality companies. That's partially the reason that I'm not panicking right now and using this as a buying opportunity. If I know the stocks that I'm buying are high quality and nothing changes fundamentally with the business because of this change in the world, then I don't care and I'll just use it to buy more. Now here's a clip from Warren Buffett and it relates to the same situation.
Unless you find the prices of a great company really offensive, if you feel you've identified it, and by definition a great company is one that's going to remain great for 30 years. If it's going to be a great company for 3 years, it ain't a great company. I mean, so you really want to go along with the idea of something that if you were going to take a trip for 20 years, you wouldn't feel bad leaving the money in with no orders with your broker and no power of attorney or anything, and you just go on the trip and you come back and it's going to be a terribly strong company. I think it's better just to own them. I mean, we could attempt to buy and sell some of the things that we own that we think are fine businesses, but they're too hard to find. I mean, we found See's Candy in 1972, where we find here and there we get the opportunity to do something, but they're too hard to find. So to sit there and hope that you buy them in the throes of some panic, that you sort of take the attitude of a mortician, waiting for a flu epidemic or something. I mean,
Another lesson I learned in a market crash / a correction is to be smart with your money and always have capital on hand. One of the areas I'm trying to work on as an investor is trying not to blow all my money right as it goes in my brokerage account. I recently got $1,700 to invest, and I currently have $900 left of it, and I'm just going to hold and wait for more buying opportunities to come. I have a few businesses and stocks that I've been really looking to buy for a while now and that are on good deals, but I'm not going to rush it. I'm going to hold this money for a while, and hopefully some more dips will come. So guys, in conclusion of this video, the one thing I want you to walk away with, be smart with your money. Don't waste it too quick when you invest it. Also, buy the high quality companies. Buy the highest quality companies you can think of. The Apples, the McDonald's, the Microsoft, the Johnson & Johnsons, whatever businesses that you guys have analyzed as being a really high quality company in your eyes and other eyes of people, buy it. Because those are the stocks that are going to be on the biggest sales but not be available for a long time. So some of you may be wondering what I'm doing. To know what exactly I'm buying, you'll have to join the Discord or just wait till the monthly portfolio update. But I can just give you guys a little hint. I'm buying really high quality companies right now. All the dollars that I've spent right now on stocks are the highest quality companies in my personal views. So yeah, guys, I really appreciate you guys sticking through here. I hope this video, finds you guys well and you're all staying safe, not getting into the war. And I appreciate you guys watching again. Smash the like button, subscribe, do dividend stocks, not drugs, and have a good one. Reinvest your dividends, please.